What a day for Tesla. Stock was up almost 5% at one point, and unfortunately, I was right, which I didn't want to be right, and we rejected perfectly at this resistance. Now, I'm still bullish from a long-term perspective. Over the next couple of months, 3 to 6 months, I do think we're easily going to hit $550 to $600, but I have been short-term bearish for a couple of key reasons. Those reasons which we will talk about in today's video, and more importantly, where I think we're headed short term before the next breakout. Now, I posted here today saying for me to remove my $350 retracement thesis on Tesla, one thing has to happen. The weekly BX must increase and close higher low. Until that happens, I'm pricing in a worst case scenario pullback to $350, then a breakout to $550 into Q1 2026. Then I also retweeted that saying that even though it's ripping today, that old volume shelf support can turn into a resistance. So I would be respecting a rejection. I hope we break through it. I'm still holding my April calls, but we must remain objective. And that's exactly what ended up happening here, right? So let's break this down. Let's talk about this chart and let's talk about what I think is going to happen from this point forward. Now, the very first thing that I want you to take a look at is going to be the monthly BX trender at the bottom of your screen. The BX trender is basically my guiding light and my North Star, especially on a monthly time frame. And we go through this basically in detail within our THT playbooks and all of our courses. The link to our entire course library, all of our indicators and SOPs on how to use them will be down there as well. And in most cases, when the monthly BX trender is green, you'll be able to make money using any strategy. And so that's why a green BX trender is basically our guiding light. And so you'll notice that right now it is currently green. But one thing that you have to understand with the market is that it's never going to go straight up. If we have a monthly time frame, a bull market that's lasting sometimes 6, 12, 24 months, there are going to be a lot of times where price breaks out, price pulls back a little bit, then breaks out. And in most cases, when the monthly BX is green, we look to buy each and every single dip that comes our way. So with that, this is why I've been extremely bullish on Tesla still, and I've been very bullish on Tesla even dating back into July and the summer because the BX trender was increasing and showing buying pressure. Now, with that said, the reason that I have been bearish as of recent is because of the weekly time frame. So if we now, instead of having a monthly BX at the bottom of your screen, run a weekly BX, you're going to see that we closed red last week. This is normally not a good sign. When you have a dark red BX on the weekly time frame, but a green BX on the monthly time frame, it is normally meaning, as we said before, the monthly market trend and market wave or buying pressure is still bullish. But in the short term, price is either going to sit sideways, which we really don't want to be a part of, or it's going to pull back, which we don't really want to be a part of. Now you'll see here that it has continued to hold red. And the fact that this previous support level ended up breaking at $420 is not a good sign. And we unfortunately had been saying that if the support level broke, our short-term bullish thesis is definitely off of the table. And that is exactly what happened last week. Now, the thing here is that this, in my opinion today, was a perfect trap. Right? In most cases, these traps happen when price is pushing back up into this level. And a lot of the times it's meant to look like the market's getting bought up and then it's going to break out to the upside short term. But as I've said plenty of times before, what was a prior support is now normally going to be a strong resistance. And that's why, even though I'm holding my April calls, I'm not averaging down, I'm not biting to buy any shares right now, I'm remaining patient. Because if today was really a very strong rally and it was the bottom, then once this weekly BX trender increases, nothing is stopping me from buying in more. Nothing is stopping me from selling cash secured puts. Nothing is stopping me from averaging down on my calls. Nothing is stopping me from adding more exposure to Tesla. But until that happens, I'm not going to do that because most of these bounces are normally going to be false breakouts. So price comes right back up into this resistance. We have a very strong resistance on the volume profile. Those of you who use the volume profile indicator, which you can get access to ours completely for free, link is in the description, will know that these areas tend to act as strong supports and resistances. Now remember, once you have a previous support, that will normally act as a resistance And as most of you know, unfortunately, these thin areas that occur on the volume profile from about 430 to 350 tend to act as price highways. They are basically areas where the stock will break out or break down aggressively because there's not a lot of volume in those areas. So the same way that we aggressively broke out here in September for the same exact reason that we were going long back then is the same exact reason why I think this drop is most likely going to occur. So looking at the short term here, I do think, unfortunately, that if Tesla cannot reclaim $425, that price will most likely continue to burn its way down to $350, which is another 10% sell-off from here. Now, I do believe that it's probably going to bounce there. I think it's going to get bought up heavily at 350, and then we're going to go and continue this 9-month rally. Basically the same exact thing that happened back here from October 2021 down to March, but on a smaller time frame. Now, another level that we should be looking out for here, and we teach this within our market bias course, which is down in the description, is the weekly market bias. Now, in most cases, once the daily market bias breaks, which it has, the next support level that we need to be looking for is the weekly market bias. And when we are trending over that weekly market bias, we are normally in a very bullish market. And you can see that each and every single time we bounced here on that market bias back in August of 2025, that was the bottom. And so I do think the worst case scenario, the pullback to 375, absolute worst case $340 will end up happening. I do believe that we will bounce from there. I will continue to hold on to my call options for Tesla. And if we end up going down to $350, I will look to open up some shares, maybe sell some cash secured puts, or open up some more call options, but at a shorter term strike price or something closer in the money. I hope this video helped. Let me know what you guys think down in the description, and I'll see you all next time.